The fools in life want things fast and easy. Money, success, attention. Robert Greene. And Mr. Greene is 100% correct. The fools want it all and they want it yesterday. They want to go to some website, find a trick, and learn how to make millions in the stock market overnight. Isn't going to happen. Has never happened. Won't ever happen. 10 to 15 minutes a day is all we ask. Let's jump into these charts. What do we see going on? We had that weekly vertical crossover on the S&P 500 at the end of this last week. And trying to draw, it's about impossible to draw a trend line when a trend just starts. But we have the weekly vertical crossover, and we see that it ended up right at the end of the day turning down 2.02%. Our weekly vertical crossover is still in play as far as the weekly chart goes. Derivative oscillator gaining upward momentum, price percent oscillator heading up, not at the same strong angle it had been last week, but we have a candle actually bigger than last week, still there 2 days in to a 5-day candle. We have no idea what the end of the week is going to tell us. We look at the 2-day chart, and of course, the last full 2-day candle ended on Monday, so this latest 2-day candle will end on Wednesday. So far, we have a red spinning top, means indecision, tending down. It is an open box top. It's, again, open box, so it's showing a slowdown in the up movement. And we see that the price percent oscillator is flattening, derivative oscillator losing lots of momentum, has been for the last several days since it peaked all the way back on the 17th. And what's up with the 4-hour chart? It crossed over at the end of the day. Now we see it plumbed lower than it ended. Don't like seeing it plumb below the weekly and the 2-day trend line. Don't like to see that. But again, it didn't finish there. It didn't press through it. Now, what should you do if you're in a practice trade on the S&P 500? What do you put into place? Of course, you put, you know what I'm going to do? I'm going to put it at the end of the training today. I'm going to give you a nice, this is for everybody. I'm going to put in the special training that we have on profit and loss bands. You set those bands before you start your trade. When you hit those bands, you pull your trade or you cash out of your trade, unless you have an extremely compelling reason of not doing so. How do you set those bands? Based upon your prior experience. How do you get experience? By practice trading, day after day after day after day, learning, filling out your trade worksheet, becoming an expert, learning what it is that causes you to get out of trades. Primarily, it is the position of where the 2-day chart is and where the weekly chart is, and of course, where we are on various trend lines with violations. Don't have a violation of the 2-day or the weekly yet. So again, we've seen it plumb down there. If things start going bad in the morning, you're down 2% for the day. Yesterday we were up, what was it, 0.3% or something like that. Not a lot. So we'll continue to watch, pay attention, see what there is to see and what there is to learn. And the best experience you're going to get is when things are difficult. So record it in your on your trade worksheet, learn what there is to learn from this, and let's see if things rebound or if finally, maybe the bull trap is being set. I don't know. Might have a good bit to go up yet. We still should have a good bit to climb back up to anywhere from 1/3 to 3/4 of a recovery. And of course, we've already gone well past 1/3 1/2. But again, we'll wait, we'll watch, we'll see. We'll see the bull trap when it's sprung. Could be in the process now. Don't know. Okay, what's up with the Qs on the weekly chart? Have a nice big up candle, higher high. Price percent oscillator losing a little bit of momentum with the down minus 2.09% for the day. We do have a big green up candle forming. Price percent oscillator still going up nicely. Let's check out the 2-day chart. Flattening on us. Red open box candle. Now that could turn to a solid red down candle. If it does that tomorrow, then again, you're sitting above the 2-day trend line, a good bit above the weekly, so pay attention if those trend lines start being violated. If the price percent oscillator starts losing lots of momentum and on the 2-day and the weekly really weakens, pay close attention to that. Up in the morning and then down in the afternoon. That's a solid red down candle with a wick on top and a long, long wick on the bottom, but not hitting as low as the 2-day or the weekly, unlike the S&P 500, meaning, of course, so far the NASDAQ 100 is stronger. So what do we see consequently happening as it should with bonds? Bonds up for the day 1.03%. Weakening as far as that crossover goes. Just because it happens on Monday doesn't mean it happens at the end. What did we tell you? If it ends up being an up week for bonds, it may pull back through. That's why we never call a crossover until Friday afternoon, right at the close of the market. So what do we see going on as far as the candle goes? Red down candle, not plumbing as low a low as we hit in the prior week yet. Derivative oscillator gaining downward momentum. That price percent oscillator for the time being 2 weeks into the 5-day candle heading down. 2-day, we see that a green, solid green candle means a slowdown in the down movement, or as we say sometimes, a slowdown in the go down. It's not an open box green candle, which means strong up movement. So what do we see? The price percent oscillator losing some of its downward momentum. Derivative oscillator still heading down. That's just the first day of the latest 2-day candle. Go to the 4-hour chart. Not much in the morning, then popping up in the afternoon. You can see a wick actually bigger than the candle. So again, it popped up and then pulled back. So that's where we are. Continue to watch. See if we have a weekly vertical crossover by the end of the week on 20-year bonds. That would give us the ability to look for jumping into a practice trade on something like Tango, Bravo, Foxtrot, TBF, the ProShare Short, 20-year Treasury ETF. You can notice that throughout the course of the day as the market went down the market is, when the market goes down, TBF is supposed to go up. Now, it looks like even though the market was up, TBF was up a little bit too. That's interesting. Let's check it out. How did it end the day? Let's go to the first day. Oh, I'm sorry. I thought we were looking at the 4-hour chart. There we go. God, I was like losing my mind. Why is it not going down? It is going down right now because it was an up day. So when bonds go down, as they did starting on Friday afternoon and on Monday, remember we had a strong down day, we saw TBF go up. It's called an inverse fund. I will put a link during the course of the video today. Watch up on top right-hand corner. You will see actually a link to our training video on inverse funds, how to make money when markets crash in your practice trades. So that is where we are. Glad I got that cleared up. So far, though, for the week, we're showing a green up candle forming in TBF, which of course means what? Means the opposite of TLT, which is trying to go down. Now, some of you ask, when you jump into a trade on something like TBF or PSQ or SH, which again are the short funds, respectively, of bonds, the NASDAQ 100 and the S&P 500, which chart do you use? I always stay with the same chart. I always stay, if I'm looking for a practice down trade, I'm going to stay with TLT. I'm going to stay with QQQ, and I'm going to stay with SPY, just because I'm going to watch these bigger funds move, and I'm going to get my cues off them. I'm not going to revert to following the opposite. And then some of you have asked over the years, why don't you switch over? I don't. I want to keep it simple because I don't confuse myself like I just did. So you don't want to confuse yourself. Stay with what's simple. Okay, lastly, we go to gold. What's going up with gold? What's going on with gold? Gold up for the a little bit, 0.39%. What do we see? Gold sliding sideways now, going into the 5th week. We have a red spinning top at this point. Price percent oscillator less than flat, heading down a little bit. Derivative oscillator gaining upward momentum. We have a red spinning top, like I said, lots of indecision, tending down. What do we see as far as the 2-day chart goes? Of course, it has crossed over. I don't know why that got messed up there. It has crossed over, going down back on the 2-day candle ending on Monday the 11th, yesterday, when I record this for you on Tuesday. And what do we see happening? We see just lots of indecision on gold, tending down, derivative oscillator gaining downward momentum, price percent oscillator pulling away, first day of the latest 2-day candle. And on the 4-hour chart, still negative. So again, Gold's trying to figure out what gold is going to do. And as soon as it figures that out and gives us some semblance of what's happening, what would be great would be a 2-day recross going up. I would love to see that happen. Jump into a successful gold practice trade. That would be beautiful. Don't know if that's going to happen. If it does, it does. Hey folks, second edition of our book, Charting Your Way to Wealth, is now available for purchase. And again, made some nice changes. If you don't have a copy, I'll send you an autographed one. We get the full order in. Sent out a bunch yesterday, some early releases yesterday, but going to get the full order in on Friday. So please go ahead, line up, get right off the press, hot off the press. It'll be ready for you. That's where we are as far as our 4 main charts go. We're now going to go to Bitcoin, real estate, and oil. Let's jump to Bitcoin first. Bitcoin a down day, just a little bit, 0.04%. We have a red candle, red open box candle forming, means a slowdown in the up movement. Price percent oscillator really losing a lot of energy. Derivative oscillator still moving up. Go to the 2-day chart. Of course, it's been cracking up since it crossed over back on the 9th, Thursday, the 9th of April. Really went sideways after that for a while and then took off starting the 27th of April. And of course, during the month of May until over the course of this, just recently, we see things really cooling off there, red down candle forming. So that's where we are on the 2-day chart. Price percent oscillator flattening out, derivative oscillator losing momentum. We saw things cross over yesterday afternoon and then big down in the morning, about the same in the afternoon. So we'll see what Bitcoin's trying to figure out to do. Again, we did have that weekly crossover, which is nice, but a lot of weakness has set in since then. Now, let's look at real estate, down big for the day, 4.55%. What's real estate going to do? Well, nobody's working, paying rent. I mean, when is all the new construction going to stop? Are people selling houses? How much of our housing prices reduced? How much has been just sucked out of the economy? Don't know, but I expect real estate's going to plumb some depths again. Still negative on that weekly chart. Price percent oscillator heading down now. Derivative oscillator did go positive. 2-day chart. Pay close attention. If you have a recross going back down, might mean some shorting opportunities for a practice trade on real estate. And then we look at, because remember, it's currently in a confirmed down move on the weekly, so that 2-day rotates back over. It can get you in there. And then lastly, what do we see on our 4-hour chart? We see on the 4-hour chart down move in the morning, huge down move in the afternoon. Real estate really ramping over, going down. Price percent oscillator cracking down like a hockey stick. Derivative oscillator flipping over for a big down move in the afternoon. So we go back to the weekly for our last chart of the day. As you guys requested, oil. Oil ended up down for the day 0.94%. I believe it was down a lot more earlier in the day. I could have sworn it was. We'll look. But what do we see going on with the price percent oscillator? Still tracking down. Derivative oscillator peaked in its downward momentum back on the 27th. That's where we had that sideways slide and then a drop again. But it's continued to lose downward momentum 2 days into that latest 5-day candle. 2-day chart. We see things again just sort of tracking steadily, moving up. So we see the price percent oscillator gaining some upward momentum, even though gold was down for the day. We see, and what was the high? The high, the low on gold was 2076. The high was, no, so it must not have been hammered as bad. I must have gotten confused with real estate. So what do we see going on? The derivative oscillator getting closer and closer. It's positive. Price percent oscillator getting closer and closer to going up. And we see just sort of the track along trying to head up on gold. Go to the 4-hour chart. And again, we just sort of see that sideways slide. So we'll continue to watch, see what there is to see on gold, what there is to learn on it. But again, as far as that weekly goes, still down. At some point, gold is most likely going to recover. Will that be 2 weeks from now, a month from now, a year from now, 10 years from now? I don't know, friends. The charts will tell us. Remember, it's all about price movement. It's not about what you hear on the news. It's not about the lies you read in the papers. It's not about the guys who move their mouths and read from teleprompters to keep you tuned in between commercials. Drop it. Pay attention to price. God bless you, my friends. All the best from the whole team at Charting Wealth World Headquarters.